Good morning, everyone. My name's Doc, and welcome back to the channel. Today's video is going to be part two of my trading watch list series, part two of two, so the final video. In part one, I discussed my pre-trade checklist, basically everything that I want to go through and read to remind myself before opening a position. If you guys ever played any sports, or maybe you even played tennis like me, there's not a lot of coaching in tennis. So, whereas in basketball and all these other team sports, you get timeouts, you get time with the coach during the game. In tennis, you really don't get anyone on the court with you. So, what I would do as an athlete was, write notes to myself, or maybe my father, my coach, whoever would give me reminders and be like, okay, let's write these on some flashcards. So when I would change sides, change ends of the court, you get a little bit of a break. I would pull out cards out of my bag, give myself reminders in the heat of battle. So I took this same concept, applied it to trading. I was like, okay, I'm gonna have one for pre-trades just to, walk through everything, walk through my mindset, make sure everything's okay, make sure I'm not, making the same repeatable mistakes that I was making early on in my trading, call it career. And I made a second list for after a position is open. Now, what you may be wondering, after a position is open, like what do you need a checklist for? You've already entered the position. What is there to read? It's kind of funny because you're really not supposed to do anything, right? There's nothing to do. There's either A, you get invalidated or you get stopped out, or B, price is moving towards your target, but you're seeing warning signs that, you may round trip, or, your idea may get invalidated on the way there. You can take profits, or C, it hits your target, right? There's not really too much else to do. Majority of the time, it's like do nothing. And a lot of people really mess up in the do nothing part. And me, myself, I was making a lot of mistakes in this area. And this is just a bunch of notes that I wrote to myself, from myself, basically just reminding myself just to do nothing the majority of the time. I was doing a lot of micromanaging. I was doing a lot of crap like that. Maybe some of this sounds familiar to you guys. Maybe you guys can relate. I think it's very common for people to kind of just over manage positions, stare at charts too much. So that's what this video is going to be on, basically everything that I want to cover once a position is open. So without further ado, let's get into the video. All right, guys. Number one, are you watching the 5-minute chart at your entry like a maniac? Now, this is something that I think everyone does. I think you'd be lying if you said you didn't do this, but it's a good reminder. It's something that I had to remind myself. If I got the setup that I wanted, if everything in the pre-trade checklist hit all the boxes, I entered the position. Why do I need to be watching it at entry? Obviously, there's going to be volatility, especially if you got a really good entry, especially if you got the entry that you wanted and it's not moving in your favor immediately. It's just chopping around your entry. You can see your P&L flying all over the place, especially if you're in a perp position, in a futures position, you're on 10, 20, 30x, whatever. Your P&L could be moving all over the place and really, really messing with your head. So there's no reason to be watching the 5-minute chart. If you're taking a 4-hourly trade, stick to the 4-hour chart. Make sure you're not invalidated on the 4-hour chart. Don't worry about the 5-minute chart. Okay. Number two, it's okay to be underwater at entry for some time as long as you're not invalidated. Have some balls, idiot. Very important. Very, very, very important. Something that I made so many mistakes on. You understand how many countless mistakes that I've made on in this exact point where I would enter a trade, so let's say 2% of my account, 2% risk, and immediately, let's say I'm on 25x leverage, and immediately the trade goes 2% against me. And the way that I trade, usually I try to make my liquidation, my stop loss, something like that, so that I can sleep at night knowing that, this was my defined risk. If there's something wacky happens overnight, if it's a swing position, I'm comfortable taking that loss. But a lot of times, right at entry, you could be down 1-2%, and on the P&L card, that's half your position is already down, and you could really panic. Sometimes I'd be like, oh, let me just cut this here. Maybe I can get a better entry, just a little bit lower, and then you don't get the entry, and then it flies off without you. So just have some balls. Be willing to be underwater at entry as long as it fits into the setup. something that I think a lot of people just starting out are going to have trouble with. And if that's you, have some balls, idiot. Um, if this is a confluent high time frame trade, zoom out, stop checking the hourly. High time frame structure will keep you calm, focused on the idea. Again, this goes the same with the point number one, right? It's just a repeat of point number one. All of this is going into the same mindset of, stick to the time frame that you're on. If it's a higher time frame chart, stick to the high time frame trades, stick to the higher time frame idea. If you're not invalidated on that, on that front, don't worry about what's happening on the hourly chart, the 15-minute chart. That could look like crap, but your overall idea could still look fantastic. Now, here's another one that's really important to me. Are you contemplating taking a 1R instead of being patient? A lot of my trades are always 2 to 3R setups. I'm always looking for at least a 2R. I'm not taking 1R trades, but what I will do way too often is take a 2-3R setup, get 1R return immediately. I would say within 10 minutes. Like I'm looking for, a 4 hourly trade. I get a great entry. I get the 1R immediately. Part of me wants to just cut 50% of the position there. There's so many times that I do that. I'm just like, I'm already there. Let me take 50% of the position. If I just wait another hour or two, it gets to my target and I'm just giving profits back to the market. This is not how you manage trades. And I had to learn this and I still struggle with this, guys. I still make this mistake all the time because of impatience, because of, it moved in my direction. It's going to have a little bit of a rebound. A lot of times just do nothing. Just allow the trade to play out. There's going to be a lot of chop. There's going to be a lot of mess on the way of price getting to your targets, but you're only hurting yourself. Sometimes you wait a day, 2 days, 5 days, a week for a setup to form, and when it forms, you screw yourself up by taking profits too early, even though the trade is going in your favor. This goes with the next point. Do not skim profits if the trade is going in your favor immediately. Hold the position fully until if you got a good entry or your good entry. The same thing that I just said. If your trade is working for you, do not self-sabotage. Allow the trade to play out. If it round trips on you and stops you out, well, learn something from it. Maybe, you journal that and you say, okay, this setup for me is not working. Or maybe you'll see that out of 10 times taking that trade, it worked 8 times, so you've got to be willing and comfortable to to round trip that one and get stopped out on that one. And maybe you'll have some warning signs in place. If it completely U-turns where you don't have to take a full 1R loss, you can get stopped at entry or something like that. But try not to. This is for me, guys. And remember, this is my personal list. These things are for me. You may not be having this issue. Definitely journal your own things, your own mistakes. Find out what is bothering you the most, and try to work on those. This is something that bothered me a lot. Is as price is going towards my target, I'm skimming profits way too early. Do not micromanage. Deal with the fluctuations in price. Allow it to get to your target. Now, I'm just saying the same thing 5, 6 times. I'm drilling these things into my mind as prices, as I'm in the trade. These are thoughts that just go sprinting across my head. I get the quick, itchy finger to do things. I really want to hit something. I really want to realize some profits. I want to do something, because waiting while prices fluctuate, and you see P&L all over the place, it makes you want to do something. The market is enticing you, and the trade is enticing you. Volatility is enticing you to do something. You don't need to do anything. This is just me reminding myself, do not do anything. And then the point that I briefly mentioned, discretion is necessary only if legitimate warning signs appear. Now, again, this is at your discretion. If something in your system starts flashing a red, starts flashing red, starts flashing a warning sign, maybe you SFP a significant level, you thought, hey, it's just going to blast past this, the market structure is intact, everything should be fine, but you get just a disgusting wick off of a level, you may want to take a step back. You may want to redefine the parameters of your trade. You may want to redefine risk. You may want to look around the market. Maybe a sympathy occurred when you're trading an altcoin and something happened on Bitcoin that caused your altcoin to have a negative reaction. This is, again, at your discretion. Try to separate this from everything I just said prior. In most scenarios, you're just self-sabotaging, but in certain scenarios, there are warning signs that you should listen to. You as a trader have to make this distinction yourself through experience and through repetitions, what your warning signs are and where you're just paper handing and self-sabotaging. I had to just put this on there so that I just don't go 100%, stone cold and just hold everything. You know, there are certain times where there's warning signals, but as long as there's nothing warning and nothing flashing red in my system, I've got to hold the trade. Okay, scalps and intras can be closed early. Swings should not. In most cases, you're just paper handing because of the 15-minute chart. Again and again, just repeating the same thing. I'm not gonna go deeper at this point. Are you flipping bias every hourly candle? Again, guys, these are just I'm just repeating the same thing. Are you oversized? You should feel nothing if appropriately sized. Very important here. If you took the position, you defined your risk. This is in my before taking the trade. This is in part one of this series. In part one, I discussed this. If you're sized appropriately, basically, if your risk is $500 and you're saying, I want to lose, or I'm willing to lose up to $500 in this trade, if you're sized appropriately, you've already said before getting your entry, before executing your trade, you've already said, I'm willing to lose $500. Once you're in the trade, you should feel nothing. You should already mentally be accepting that I've already lost these $500. This is the cost of admission. This is what you have to pay to play. No one is worrying about the cost of admission at a theme park after you've already entered the park. You've already paid the ticket. You've already bought the movie ticket for the movie theater. You're already sitting in your seat. You can't be thinking about the price in the back of your mind as you're watching the movie. You're going to ruin your experience. You're actually going to, ruin your night, right? So same thing with a trade. You shouldn't feel anything if you're appropriately sized. Do not adjust position size once it's agreed upon and the trade is open. Instead, learn from it. Micromanaging hinders growth as overall trade gets muddled. Now, what I mean by this, if you have you're taking 1 hour risk for a trade, for example, right? And after opening the trade, something occurs and you really want to, you're like, dang, I should have taken more. For me, as I learned, I'm not going to add to the position. I'm not going to say, let me add more, because now this might be a wild example, but maybe hopefully one of you can relate to this. If I'm going into the gym and I'm saying, look, I'm going to do a set of 20 push-ups, it's almost easy to knock out the 20 push-ups. But if I'm doing 20 push-ups and at 16 reps, someone tells me, hey, do 25 or do 30, mid-set, you're kind of, it's difficult to tell your brain to adjust to that new information and just attack it right there. Now, some people are animals and they'll be fine with that. And you could be an animal on the charts and you could absolutely add to your position size and handle that emotionally. But for me, the trade gets muddled. If I'm doing that, what I end up starting to do is I start up second guessing. I'm like, oh, I've added too much size now. I don't know about this. Then volatility strikes. You're already mentally prepared for the volatility of your 1 hour risk, 2 hour risk, whatever you've agreed upon. Once you add size to that, that adds emotions in the heat of battle that you weren't prepared for when opening the trade. It muddles the trade. It could hinder your performance. You could end up leaving with less profits. After adding size, you could screw yourself up so much that you make even less money than had you just left the original position size open and allowed that trade to play out. I hope that makes sense. That's how that works for me. Again, it works in reverse too. If the trade is working against you and you're underwater, I would suggest not martingaling the position. I think that's just copium. I think if you're going to get invalidated, get invalidated. If you're going to get stopped out on a low time frame trade, get stopped out. There's no reason for you to be adding to underwater positions that are going towards your invalidation. Nothing, oftentimes you're not just going to magically U-turn and get, oh, I got a fantastic entry. Oh, and then you convince yourself, oh, this is just an SFP of my entry. And it's very, very rare that something like that's going to play out. Even if that is the situation, and it's doing something like that, your original entry, as long as you're not invalidated, as long as you're not stopped out, obviously there's nothing really to do. I'm not going to add size either way. Execute by doing nothing. That's the moral of this video. That is the moral of this entire thing. If you stop the video here, that is the lesson. Execute by doing nothing. The biggest enemy is yourself. Once the trade is executed, you've put in all the work, you've set up the setup. You've accepted the setup, you've accepted the risk, you've accepted the parameters, you're going for the target. There's nothing to do. You're your biggest enemy. Do nothing. Okay, next. You did the groundwork. The only person to blame now will be you if the ticker makes it to the target without you. That goes back to the, are you contemplating taking the 1R instead of being patient? Just be patient. If it makes it without you, you have only yourself to blame. If you get close to your target and it chops around, be patient. It will tag the level eventually. I can add to this, if your analysis is correct, if your levels are appropriate, that's a different video, that's a different time. If your system works and you're confident in your system, just be patient. Sometimes it may take hours to the day, depending on the time frame you're playing. If you look at Bitcoin right now, a lot of people, well, I don't know if this is a perfect example because it just slammed into the target, but let's see, OP, right? Okay, so look on OP. This is exactly what I'm talking about right here. This was my target, right? $2.11, right? And I'll tell you, I'll be completely honest with you guys. I didn't play this perfect. I'm breaking my own rules again. Now I'll explain why. This may be actually this is probably perfect to learn from. Learn from me. So I took the trade off here, 250. I even talked about this in part one, right? My target was here. It's been chopping around, chopping around, chopping around near my target, right? It made a bounce. I wasn't threatened. I took hefty profits in this area because I'm like, it's so close. Let me take a bunch anyways right here in case the entire market U-turns. Bitcoin hadn't puked yet. I was waiting for Bitcoin to puke. It puked today. As Bitcoin was nuking, OP was sitting up here, right? And I'm thinking, okay, now it's gonna puke. Now it's gonna puke. Now it's gonna puke. Now it's gonna puke. And I kept thinking, is OP showing relative strength? If Bitcoin finds a bottom and Bitcoin has a bounce, does that mean OP is going to be sent flying back upwards towards my entry? This thought kept on coming across my mind all day, all day, all day. And even though I only had 25% of the position remaining, I had already locked in 75% of the position, I was still thinking the same things that I could round trip the rest of this. It's better off just to close it. It's better off just to close it. It's better off just to close it. And you know what I ended up doing? I did just close it. I closed it again at 222, something like that. As it came down here, I was like, look, it's just entering that same chop area. Let me just close the rest of this position. And I didn't have the patience, and look at that. Just a little bit later, it slams into the target. So I was trading this on a 4 hour. This is a swing play. This was an overnight play. This is not an intra play. I took the position on Monday. Yeah, I took the position on Monday. Today is Wednesday. No, today's Thursday. Today's Thursday, right? So I held it for many days, and just on the final hours, the final day, just like I wrote in the notes, I was impatient and I didn't get the last chunk of it. And in fact, I could have held the entirety of the position and probably made an extra couple $100, an extra, whatever this is, 4%, you know, there would have been a lot extra, there would have been extra money coming in my way had I just held the position through a little bit of the chop, like I mentioned here. So that's just a lesson for you guys. You see it firsthand. These are still things that bug me. I'm still making the same mistakes. I still got to remind myself, and I'm telling you, I know you guys feel the same thing, that you're feeling the same pressure as I am in these moments. I know, there's no human out there that doesn't feel emotions. There's no one out there that's 100% immune to the volatility of the markets, to the chopping P&L. Everyone faces the same things. We're going to keep making the same mistakes, but it's on us to improve them. When I journal this trade later today, because I closed it out this morning at night, when I go through my journal and I journal the trade, I'm going to write again. I made the same mistake. I was impatient at the end. I was thinking this, that, and the other. I was adding variables to the trade. I was creating scenarios in my mind that weren't there on the chart. I was thinking, what if, what if, what if, instead of just allowing the trade to play out. I already taken enough profits. That was that was pre-planned to take the profits where I took them at that demand order block, and it was in my plan to play it out to the end. I didn't do that, so I will learn from it. Okay, why did you enter this position? Reread before opening a position list. Again, if you start getting Confused about the trade, go back to your pre-trade checklist. Go back to the checklist of what you were saying when you opened the trade, the notes that I told you guys to write on your charts. Go read your notes on your own charts. Understand that your trade is probably still valid and you're just getting shaken emotionally. Are you thinking about closing early? Guys, you guys can see a pattern here of what my mistakes are. If it's not clear to you what the mistakes that I make are, it's clear to you now. Full transparency. Are you thinking about closing early? Yes, I am, a lot of times, today included. Are macro events fudding you into closing early? Again, if you're in some shorts and something happens bullishly, the S&P goes up, I don't know, CPI prints nicely and the market squeeze, but you're in a high time frame short and it just squeezes on the low time frame, and you just squeeze into downtrending moving averages, right? So like right here on OP, you move down, you got to squeeze upwards. You start thinking, oh, maybe Bitcoin is showing, maybe it's showing OP showing strength against Bitcoin, something like that. Is it a macro event fudding you out of your trade? Don't let that occur. Case in point. Are you watching the P&L or your chart? Very important for a lot of people. A lot of people already always say, hide your P&L. Don't look at your P&L. Don't look at your portfolio balance. Don't open those pages. Focus on the chart. There's a lot of terminals where you can hide your P&L completely. No one can see it, not even you. This helps you just execute the trade as the trade and not worry about the numbers up and down. And you look at your chart and you go, oh, I'm up $300 in this trade. Oh, I'm down $300 in this trade. Oh, I'm up $800 in this trade. Oh, you don't have to look at that every few minutes. Focus on the trade itself. What reason is this chart giving you to close early? Most of the time, you're simply projecting negativity and fantasizing negative scenarios. Does this sound familiar of what I just said on OP? Most of the time, I didn't read this checklist today, by the way, guys. I did not know, I didn't look at this. There's a lot of stuff going on in markets. I didn't come back to the square root. I didn't come back to this video today. I could have come back to this and it probably would have helped me. But, funny enough, I'm recording it and I'm giving advice to other people, and I'm not following my own advice. So this is something that I will improve on. Like I said, I will journal this tonight, and this will probably stick with me. Really important moments like this tend to stick with you. A big loss tends to stick with you. A big win sticks with you. A moment like this for me, where I'm preaching, or I'm helping, or I'm educating, or I'm on a podium, I'm on YouTube, and I'm talking to other people about my dirty laundry, is going to stick in my brain. This is going to be a moment for me, hopefully, where I'm like, you know what, I'm exposing my mistakes to the world. That's going to make me feel a little bit of shame or embarrassment. These emotions are natural as a human being when you air this stuff out to people, and hopefully that sticks with me, so the next time that I think about this, I don't have to go to my chart, I don't have to go to my notes. I'm just going to remember, hey man, don't be that guy. Don't be that guy that's hypocritical and giving other people advice that you can't follow yourself. I don't always make these mistakes, but as you guys can tell, they are the mistakes that I make the most. That's why I repeat them so often on here, or repeat them to myself, or try to repeat them to myself at least. Um, okay. Where were we? Focus on your invalidation. Self-explanatory. Has the idea of the trade morphed after you took it? Have lines, boxes moved? Targets, timeframes changed? If likely, you're already invalidated in coping. Very important. The setup is the setup. Allow the setup to play out. Do not change the parameters of the trade once they're already open. Do not let an intra turn into a swing trade. Don't hold your day trades overnight. Don't martingale your swing trades underwater. If there's a level that you're bidding and that level broke down and you're like, oh, there's another level just close by, I might as well just no, close the trade, take the L, journal it, remember it, open a fresh trade. Don't get into the habit of trying to save your trades. Saving your trades. I think Trader Mercury tweeted this out today, at Trader Mercury. I believe that's his handle. At Trader Mercury tweeted this out today in response to, in a thread, saying basically you will be able to save a bunch of your martingale trades until you don't, and the one that you don't is going to murder you. So don't make it a habit. Don't blow up your account. Trade the system. Don't cope around like this. Are you adding to a bad underwater position? That goes with that. If your invalidation was hit, get the fuck out. Do not try to save the trade. If your invalidation was hit and price still got to your target afterwards, you will learn something that helps your game plan the next time. Not always true, but sometimes very true. If you're taking a setup that you're unfamiliar with, you get stopped out and it goes to the target anyways. Sometimes you may have not picked the correct. You may not have picked the correct breaker setup. You may not have picked the correct liquidity. Maybe you're picking a random wick where you should have focused on daily low, like a Monday low, or a weekly low, or quarterly low. There's ways where you can improve on your own trades, improve on your own setups. Um, Sometimes getting stopped out or getting invalidated is just the market. You're obviously going to lose a lot of trades. My personal win loss is in the 60s. So I'm losing one out of every three trades that I take. More than that, it's in the low 60s. But um, I lose a lot of trades. A lot. Sometimes they're my fault. Things that I've covered in this list where I screw up at entry. Sometimes they're the market stopping me out. Sometimes I'm taking a poor setup. Always, uh, you know. Um Always learn from your mistakes. That's what I wanted to say here. Always learn from your mistakes. If something like this occurs to you, your invalidation gets hit, price still gets your target afterwards. Sometimes, luck of the draw. Sometimes luck of the market. Sometimes you did something incorrect that you can learn from. So try to learn from your trades. Journal your trades. Are you planning on skimming profits at a local resistance level? Hedge elsewhere to prevent drawdown if you can find a viable option, or instead, if you're feeling antsy, use your practice account. This goes more for swing trades. If you're in a swing trade, for me, typically when I take swing trades, I'm taking much larger position sizes than just 1 or 2% of my account. I'm going up to 5% of my account, 6%, 8%. Swing trades on a high time frame rarely occur for me. You have to have a confluence of a break in market structure, confluence of daily trends being lost, a back test into liquidity or back test into a supply, a drop back into supply, something like that, right? You have multiple confluent factors on a higher time frame, a daily chart, a 4-hour chart, etc., working for you. These trades don't come often. It's really hard for the market to repair broken structures on the daily. It's really hard for the market to repair broken daily trends, at least from my system, from my experience. So for me, I'm going to size up into those. And now, when I'm sizing up into those, they're going to have stops along the way. There's going to be roadblocks. There's going to be areas there's going to be levels on the way down where you can expect your trade to probably bounce the opposite way. Now, if you see that's coming, what I do sometimes, and I did as recently as January, I took a long on Litecoin. Let's see if we can pull that up right now. I took a long on Litecoin somewhere right here. I believe it's 76, 75, 76, something like that. And basically, I was just marking out like every high, like the $80 high, the $85 high. There's an SFP of a high. There's something like this, something or another. There was a level every single way, every single place, and I'm like, oh, this could offer some resistance, as it did. But look, it's still holding the 4-hour trends. It's still holding the daily trends. It's still holding, daily 100, 200s. Like, there's multiple things in my system that is still printing for higher prices. Yet what I did was made the mistake of constantly skimming profits. And if you have $100 in a trade and you take 50% out at the first resistance, you take 20% out, take 25% out. Eventually, you have nothing left in the trade. It's almost not even worth holding. Even if the remaining 20% of your trade gets all the way to your target, you're making pennies on the dollar had you just done something else. So for me, this is a more recent addition to this chart. This is something I'm working on nowadays, where if I'm going to take a swing trade, what I'm going to look to do is look for something else, a different coin most of the time, or use a different account to hedge that position. I'm going to try not to take profits on that position to hurt my overall trade. What I'm going to do is short a different coin. Maybe I'll short Bitcoin, because obviously altcoins should outperform Bitcoin when the markets are going up. Maybe you take a hedge on shorting Bitcoin. Something like that, something or another. I'm not going to get too much in detail with that, but I think hopefully you understand the gist of what I'm trying to say is not to sabotage your own swing trades. Something that I'm working on currently. Very, very recent addition. Have you spent too much time on Twitter, Discord looking for other people to FUD your position? You need to close socials for the day or the week. Another thing that I've been doing in 2023, I've spent a lot less time on CT in January. In January, early January, I had high conviction that the markets were going to rip upwards. I got a confirmation very early. The H4 200 MA flipped bullishly for Bitcoin. I got hyper aggressive. I added to positions. I went for everything. Um, you know, but the market was really bearish at that time. And because of the market's bearish bias, I ended up taking shorts that I wouldn't otherwise had. I started looking, I was like, oh, maybe I'll hedge a little bit here. Maybe I'll do a little bit of this. Maybe I'll short this. When my ultimate thing was just do nothing. If I had done nothing and I stuck with my bull bias, I wouldn't have, if I had stuck with my own game plans and not looked to crypto Twitter, not looked to Discord for other people's opinions, other people's bearishness, floods into your own mind, you can get shaken on your own game plan. So if that's happening to you, basically just close socials, go do something else. Socials will only hurt after a trade has been opened. Correct. If you're in a trade, there's no reason to be looking for other people's opinions. You've already done your due diligence. You've already taken the setup. There's no reason to be looking to other people's opinions once the trade's open. No one's opinion matters besides your own once a trade is open. I repeat, no one's opinion matters other than your own once your trade is open. Are you being productive elsewhere instead of watching charts? Go read, work out, sit in the sun. That's the last thing I want to say. For me, when I'm in trades, especially like these last 2 months have been crazy. I haven't been sleeping, haven't been eating properly. I've been, a lazy shit. I've been sitting indoors way too much. I can use excuses, but ultimately I was being unproductive elsewhere because I'm so hyper addicted to the charts because we finally got volatility. But most of the time, being addicted to the charts isn't productive. You can set alerts and you can walk away. You can get the alerts on your phone. You can come back to the desk. You don't need to be sitting there once the position is open. Obviously, when you don't have positions open, you're looking to open a fresh position. You need to be there. You need chart time. You need to be looking for ideas. But once you have positions open, like I said, this watch list or this list today is after you've opened a position. After you've opened a position, you have positions running. You don't need to be sitting there looking at the 5-minute, 15-minute candle. You don't need to be sitting there all day. You don't need to be sitting on Discord all day. You don't need to be sitting on Twitter all day. These things are just going to hurt your own positions. So don't do that. Go be productive elsewhere. And that's going to do it for this video, guys. I know I said a lot of the same things in multiple different ways, but hopefully this helps you guys. And I was completely transparent on the OP trade. You guys can see the mistakes that people make. This is not something that I'm going to be tweeting. I'm not going to be putting this on Twitter. And when you guys see, a lot of people are skeptical. Oh, traders don't post their losses. They don't talk about these things. That's true because, it's a very it's a long-winded thing to talk about, and Twitter only gives you 140 characters, 280 characters. I don't know what it is. You get a very small amount of time. You don't want to keep making threads explaining everything. This is the way that I'd rather do it. If you guys want, I'd love to like stream every day. I can sit here and stream on Twitch and just talk and talk to chat and talk to you guys. I'd love to do that. That would be a lot more fun than sitting on Twitter and trying to craft these diagnoses that I would prefer to save for my journal. Trading is a personal journey. You do share where you can, but ultimately it's a very personal journey. And if I want to share, I'll share on Discord and I'll share with my friends and I'll share other places. But Twitter is a place for posting ideas and posting, afterwards success or failures. It's not really a place to sit there and just, do post-mortem reports for people and be like, oh, I skimmed here and I did this and I didn't hedge here and I didn't do this. That's nonsense. No one even wants to read that. No one's going to sit there and read your threads anyways. So if you guys enjoyed this video, I'm not asking for likes. I'm not asking for subscriptions. I'm not asking for anything. But if you do want to support me, completely free to you, link your Bybit account if it's already open and not affiliated with anyone. Link it to my affiliate link. There's a very easy way to do that, and I'll throw in trend indicators, the ones that I showed you in this video, the ones that I have and I use all the time in my system. I'll throw those to you guys for free. They're custom built. They're very useful. Maybe you can add it to your system and improve on your own system. Otherwise, guys, that's it. GG. I'll talk to you guys in the next video. Peace.